Welcome one, welcome all to DeFi Crypto and Airdrops Money Talks Edition. I am Mike, aka Veteran Crypto, and joining us as always is Taylor and his degenerate business partner. Let me throw him up here, Jeff. Jeff, Jeff, Papa.
Man, how we
How
doing?
you? Oh, doing good. How you doing, brother?
I'm all right. I'm noticing that the Senate just passed the big, beautiful bill.
Yeah. Oh shit. That was the one thing I was supposed to be figuring out.
Oh, so are they? Is it going to the president's desk now, or?
No, it's got to be. It says, let's see what I just saw on this. It looks like it's got to go back to the House for the reconciliation. They got to because the Senate passed their version, so now the House. I don't know. I don't understand this reconciliation. Some BS has got to happen, and then it'll probably go. And honestly, it'll be real interesting to see what happens after that.
Well, you're lucky they cut out the tax on litigation financing.
I didn't even see that.
Yeah, they're going to tax litigation. Yeah, Kevin sent it to me. They're going to tax if on plaintiff side if you get financed through litigation, you're going to be taxed 40% on any of the.
That would have freaking destroyed what you guys are working on.
Well, the hard part there is like that's basically what insurance is. Insurance is like financing litigation on the defense side,
right?
And so
the reality that would have been a horrible blow to just the average Joe, right? Because the reason why there's such pushback against litigation finance, there's this myth that it creates frivolous lawsuits, but that's complete bunk because frivolous lawsuits by their definition have no merit. Yeah. And so what ends up happening in a frivolous lawsuit is you lose almost instantaneously under emotions. Like you risk a judge will just throw it out, or you immediately get crushed upon your first sort of, obviously Taylor can talk to this much more than I can, but once you try to move forward with a frivolous lawsuit past I got served, this is annoying, I write a check to get away from it. If the people don't write a quick check to get it down the road and are willing to fight you, frivolous lawsuits are not victorious. So the reason they're a nuisance is because so many people can file suits, for relatively small amounts of money compared. Like my dad told me once, he used to work for AIG way back in the day, and he says if they get a lawsuit past a certain point, like if they get a lawsuit, and this is like 20 years ago, and it's 50 grand to make it go away, he's like, we write the check. I go, but what if you're right? He goes, doesn't matter. To prove her right, it's going to cost us 150 grand, so it's just economic. Yeah. Right? So what litigation finance does, if it's what's the word I'm trying to say? Meritorious, right? If it's a suit with merit, if you have a real reason to sue, and you're suing Apple or Dow Chemical or AIG or any of these massive, doesn't matter who it is. If you're suing a massive company and they've got an army of $1,000 an hour attorneys on retainer, and they're like, yeah, come at us. What are you going to do? Right? Litigation finance levels the playing field and goes, oh, well, have you met our $1,000 an hour attorneys? Because we've got $5 million to go to war with you. And all of a sudden, when the playing field's level, one, you have a much better chance at a good outcome. But two, you have a much better chance of a settlement where you're going to find a real value, right? That's fair, because they realize I'm not picking on the kid anymore. I'm a heavyweight that's got to go fight another heavyweight.
Well, right? And the reality is we know in the legal world, it's money that wins lawsuits, not having an actual claim. Because at the end of the day, it's if you can spend money, then you can't just file a frivolous lawsuit. But if you have an actual legitimate lawsuit, it's who has more money is going to win that at the end of the day. Or if you have enough money to get to an actual jury. But there's so many people that have come into my office over the years and they've had good claims. And I've said, well, this is going to cost you $20,000 to $50,000 to get to a trial, and then we got to do a trial. And the other side knows that, and so they're just going to outspend you, and then they go, I can't spend that type of money.
Well, they got all kinds of tricks that they can do to draw it out to make it cost money. bleed you, and that's yeah, and that's part of what I know you guys are working on in the background as far as trying to develop a fund, a tokenized fund to help finance these types of things to where people that can't necessarily afford it but have a strong case are able to fight back. So, well, real quick, let's get into it. I sent both of you. Let me actually bring up. Let's do this. I can share my screen. So I sent both of you uh, that post on from Jeff. I kind of wanted to get your opinion on it. Is that gentleman? I guess he's highly respected in the TradFi sector,
Mhm. That was,
and
I think it's Edelman.
yeah, this one right here. So I want to get your thoughts on this. So basically, what it says is Rice Edelman, who founded a 300 billion investment advisory firm, Edelman Financial, recommends a 40% crypto allocation for aggressive investors and 10% for conservative. He says owning crypto is no longer a speculative position. Failing to do so is. Look at these takeaways. So it basically talks about the 60, what traditional 60/40 stock bond allocation model. He says it's dead. Um, and he's been in, finance for it looks like 39 years. And he's announcing for the first time correct crypto allocation. And, again, 10%, 40%. Owning crypto is no longer a speculative position. Passive market weighted index comprised of all asset classes would have 3% in crypto. So an investor who lacks crypto is now effectively shorting it. So what is your view on this, Jeff?
Um, I think it's a little bit, it's certainly an aggressive. It's certainly an aggressive posture. Um, I understand the temptation. I don't know if I don't know if I agree with it. I
Oh,
think that.
speak freely. I mean,
So here's what I would say. My big critique, my first thought was, well, what do you mean by crypto? Is it Bitcoin? Is it XRP? Is it Plume? Is it Fartcoin? Like, what are we talking about?
yeah,
Yeah.
Right? Because
yeah.
some of these things, is it Trump coin? Like, there's how do you because he didn't define it, right? I mean, and we talk about, so we'll use altcoins as a category, right? I mean, I know I've
Well,
heard you talk about cycles all the time, right? I'm
well,
telling you, average
let's do this.
6-year-olds go through
Let's do
that.
this real quick. It will simplify this conversation. Bitcoin.
Okay.
It's pretty well established right now that people are using it as a store of value. It's volatile. It's still crypto. However, it seems to be a pretty, as far as crypto goes, the safest bet. So let's frame it with that. Would
I,
you
I
suggest
I would
somebody
agree.
goes that deep?
I do think, and this is not advice, right? It's my personal opinion. I do think that an allocation to Bitcoin is wise because I believe it is. I believe it has passed the point of no return from self-sustaining, and I think probably the single biggest. Well, if the big beautiful bill passes, that'll be the biggest thing Trump did, but good or bad. But probably the second biggest is at the very minimum for the next 3 years plus, the regulatory environment is going to be pro crypto, right? You're not going to
Yeah.
see Bitcoin get regulated away when the president has his own coin.
Mhm.
So, or regulated in an erroneous manner, in my opinion. So I think it's very favorable for that perspective. But I also think people need, like gold is in favor, right? For right now, gold has been hitting all time highs, and the argument is, well, there's a limited supply of gold in the market, and not in the market, in the world, like literally physically, there's only so much gold, which is why Bitcoin's called digital gold, right? Um,
Mhm.
but yet there's years where decades when gold underperforms. Even though the truism of there's no more, maybe there's more gold being mined, but there's a finite amount of gold on the planet is 100% true. It doesn't mean you can't have significant downswings and errors of outperformance. Now, right now, it seems like a no-brainer. Like, well, look, we're printing all this money. That's just going higher. Gold's this great store of value. Why wouldn't you own gold? But there's a difference between gold being a store of value, gold being a smart asset allocation, and gold always going up, right? And so my argument to someone, if they're going to buy Bitcoin, that needs to be, in my opinion, something that they don't really care in an intellectual sense, what's going to happen to the price over the next 6 weeks, 6 months, it's a 10-year thing. It's
a slow burn,
right? Because I think it's extremely likely. I mean, we can make an argument Bitcoin's gonna be worth $1 million in what, by 2030 or whatever the different projections are, but it doesn't mean it's not going to go to 50 again first. But if it does, and you buy it at 100, how about this? If the only reason you buy Bitcoin as a piece of your asset allocation is because the price, then that's not good enough for an investment, right? You have to have conviction in it, because otherwise you could buy anything that goes up and down. You could buy Beanie Babies, right? There needs to be a reason you believe in the concept of Bitcoin or crypto at large to have that in your portfolio. Otherwise, you're never going to be able to handle the downs. And on the flip side, if you do believe in it, the downs are just going to be temporary and your dollar cost average into that, right?
Yeah.
Now, I don't think any short-term money should be in crypto. Even though right now I know that you and Taylor particularly are doing fantastic in DeFi. I'm not saying that that's not great. But if tomorrow, for some reason, if we woke up and Coinbase had been hacked at the same time that, I don't know, there's some weird thing on the hill about crypto taxation is going to change, and then the coins just dump 40%, and that's the day you need to sell it to go get your down payment for your house you're going to close on the next day. That's not a good idea. Right?
Oh, absolutely.
So that's where I think people are not quite, the thing that is the hardest about financial planning is getting people to understand that just because you made money, well, that's awesome, doesn't correlate with what you're going to continue to make money, potentially, and it doesn't mean it's a good decision. So here's my argument, I get off my soapbox. We all have that friend that's just crazy that'll go to, Vegas and put $100 on a number and let it ride on a roulette wheel. But just because he hits doesn't mean it was a good bet, right?
True.
35-1, he was not going to hit and get a zero. But just because he hits doesn't mean it was a smart decision. It worked out. But you can drive home plastered and it can work out. It doesn't make it a good decision. So that's where I have to look at prudence as the financial planner, where the investor, if you're like, well, Jeff, okay, I got real money, and then I got my effort money, and my effort money, man, I just like taking the ride. Well, that's a different deal, man. Do all you want, right? Buy fart coin, I don't care.
Yeah.
But just make sure you match your money with your purpose behind the money.
Well, I actually did an episode on this. It was episode 8 in the DeFi Academy, and how to build out a portfolio. And the two questions that I pose to people when they're building their portfolio are, what is your risk tolerance? And what are your financial goals? And so, that's what I had to ask myself, and me being in the position that I'm in is much different than somebody in their 20s that's just starting out. They might be degenning into meme coins and, meme coin pools and DeFi. I'm looking for residual income. And so, I built out my portfolio, very risk off, or, hedged against risk. But I earn steady yield off of staking, lending, and full range pools. I have some range positions, but I used OPM or other people's money, the yield or fees that I earned to open those positions. So if for some reason, those go to zero, or something happens, it's like, all right, I didn't touch my principal. I that was extra money. Most of them so far have done nothing but make me more money, and I've opened more and more and more positions. So so yeah, it's all about asking yourself, those two questions. What is this money I can afford to lose? Like you said, or is it something I need to pay the mortgage? If the answer is the second, you probably shouldn't be putting that into anything in crypto. It's way too volatile. We're still very much in a speculative market. I feel we are transitioning to more of a utility market, but we are not there yet. So something that looks very bullish right now could be the Yahoo of crypto. Yahoo, those of you that aren't old bastards like me, Yahoo was it was bigger than Google. They turned down, I believe, buying Google, and Google ended up, obviously being the dominant force because they just had a better product. So it's the same thing with crypto. Something that you think is going to be the Bitcoin killer or the Ethereum killer, might not be. So you have to hedge against that. So Taylor, um, kind of, what are you doing right now that is performing best out of all of your investing? Because I know that you're huge into investing.
Uh, well, of course, my biggest investment is myself, which is always does the best. You're never going to beat what you can produce individually as a person when you can figure out what you're offering of value and if somebody wants. But
So
passive
feet pics.
investment,
So feet pics on OnlyFans.
feed pics on OnlyFans, prostituting Jeff out to people. No.
Nice.
But I'm just doing that with his mind, all right? I'm not doing that with, other well-endowed parts of him, all right?
All right.
We're only going there. So we sell Jeff's mind to people, and it's been a very good business model for me lately. No, the currently the biggest return on investment is DeFi. I mean, that is shocking how much it can return. Now, the hard part is there is that learning curve with DeFi, which there's like a lot of little mistakes that I've made here and there. And I'm like, oh crap, I shouldn't have done that way. I should have done it this way. And understanding kind of where to put things. And there is that learning curve. But once you get past it, it's pretty shocking. I mean, like yesterday, me and you were talking about our plume position. Like I made over 1% in one day in my, and that's just like shocking. The kind of return that it's putting out. But that's not going to last forever. I have a very small window where it is being invested in, but still my Bitcoin DeFi is doing fantastic. It's just nothing can compare to it. I mean, I own a lot. Well, I've pretty much gotten out of stocks. I believe July there's going to be some pretty significant turns of events. I'm out of stocks, but I own gold,
Physical or?
No, I just own the ETFs. Like,
Okay.
I have no desire on holding gold in my safe in my house. If society falls apart, I'm not going to barter in gold. Sorry. It's going to be guns.
It's going to be bullets and food.
Yeah.
Well, you need to get practicing with that thing and actually clean it. We didn't clean it while I was down there.
No, God.
The first step one is being able to get into your gun safe. And once I figure that out, man, I will have one pistol with about 1.5 mags of ammunition. So I'm pretty good. All right. When the Armageddon happens, I can miss at least one zombie.
I just see Jeff being like shooting all wild and like nothing hits. Like there's a perfect outline of the intruder.
The best is Jeff sleeps naked. So if anybody ever breaks into his house, he's coming out full butt naked, shooting his gun. I mean, the most entertaining thing I've ever seen.
Nice.
We're not going to go into that right now, but let me just say that I don't have to be worried about hamstrung by pajamas when I need to move like a ninja. You know what I'm
There
saying?
you go. Hey, nobody wants to grapple with a naked dude.
That's right. See, thank you. I'm glad you're understanding where I'm coming from.
That's the best. That's the best way to handle it. But
Oh, if I ever get in a street fight, I'm just going to strip naked. Instantly, I'm going to win.
yeah.
There is a video of a guy coming at somebody like through a ring cam. Guy comes up with like a knife, and the guy just like takes his shirt off and shucks down his like sweats, and then charges at the dude. And the guy with the knife just turns and sprints. Man, he's just like, hell no.
Instinct.
So
But the investments that are currently doing that, of course, my building does well because I rent from it. But I'm right now I'm in gold and silver. I think those are the two. I know we're hitting all-time highs over and over and over in the stock market. It just, for me, it isn't the market that I'm as scared of right now as it is. It seems like every 2 weeks there's some crazy thing. Like, the tariffs are coming back July 9th. So, and Trump now seems to be of the opinion that we should just go forward with it. So I don't know what that's going to do to the market when everybody starts going, oh, he's not pivoting. It's like,
yeah.
And so we're in a very weird time where everything is just going kind of crazy. So for me, I think crypto is where you have to look at, but like Jeff said, what crypto is going to really be the future? I believe Bitcoin has the name as the backing. The institutions are behind it, that it will be around. Ethereum has so much built on it. I don't see it going away. Like so much of the gas, even though people don't really hold Ethereum, like, holding the coin as an investment, it's all the gas that's done through it. You have to have it, just a little bit of it in your wallet, because I can't think of times I'm like, oh crap, I can't do anything. I got to go buy some freaking Ethereum to transfer something.
Exactly.
When that gets out, but the real thing that you have to understand, it isn't crypto necessarily that the coins. It's the technology that's really going to be what changes everything. Now, of course, the federal government is, when it comes out with its coin, whatever it's going to be doing, a lot of things are going to change. USDC, I imagine, will still be around and still be used. A lot of the institutions, though, are going to flip over and use the reserve.
Well, yes coin. And no. So initially, I don't think it'll be the case, because especially like in DeFi and in crypto, those tokens need to be onboarded. So they need to be added to the Ethereum chain. They need to if they're Bitcoin, DeFi, and things like that are starting to emerge. It will have to be added to that. XRPL, like they just added USDC recently, and RLUSD. So, whatever, tokens that governments come out with are going to have to be added to these blockchains. Not a heavy lift, but just something that will need to happen before they become part of these ecosystems. So I just wanted to add that.
Yeah. So, but if I want to put out there, like, I think you'll be safe with Ethereum and Bitcoin because so much is built on Ethereum. Bitcoin is you still talk to, like, you go talk to anybody that doesn't understand this world. They go, oh, you mean Bitcoin? I mean, and so right now when you go in, like investing, when they say that an institution is buying crypto, it's mostly Bitcoin or Ethereum, because I hold a bunch of, in my investment account, I hold IBIT, and then I hold Master, and then I hold ETHA, which are, so I can hold it in my just regular investment account, and so I can invest it, but that's kind of a long-term play. I just hold it. I don't even look at it. I don't touch it. Uh, and so you have a lot of these things. And so you see right now, there's been a lot of things that should have brought Bitcoin and Ethereum kind of significantly down. A lot of the crazy stuff that's been going on
Yeah,
recently,
the macro news. Yeah.
and it's just not affecting it. Like I thought for sure when the Iran war was breaking out for those 12 days, I thought for sure that Bitcoin was going to go to $90 and $900,000 or not, no, sorry, $90,000.
90,000. You're all over the place, man.
I thought 94 was like where I was projecting that it was going to go hit, and didn't get even close. It bounced immediately, almost right back. So it's holding very well above 100,000 right now. I mean, it doesn't mean it can't come back down from that, but it looks like it's leveling out as not this crazy swinging up and down constantly.
That is the big indicator for me that we're moving from the speculation to the utility. Because I really feel like with it, legislation being drafted, governments adopting, institutions adopting and building, all of these different things, that it is, moving it to that utility market, and because it gives certainty, with the asset class. But I really think that all of this is disrupting the traditional cycle, and potentially, we're going to get, diminished returns. The markets are going to flatten out more with better assets. There'll always be volatile assets, but I think a lot of the blue chips are going to start to flatten out, and a lot of the market volatility in crypto as well. Weaker bear markets, weaker bull markets, things like that. I mean, is that something that what's each of your take on that?
Well, like my take on like the stock market right now is fueled by options. I mean, it really, like, you're seeing these huge swings in the market, and it's not because tons of people are buying stock like Apple, or Apple's going down, but uh, these companies. It's because people are buying options and magnifying those investments, and so it's causing this great appreciation of the assets. Well, the reality is that game works for oh so long until it takes a massive reverse and these people are wiped out. And when that happens, that's when a lot of big guys out there were. There's one guy I listen to particularly. He's kind of been spot on most of the time with what's happening. He said this summer he predicted he called it the blow off top of the market. It was going to basically shoot through its all-time highs, go to he predicted something like 20-30% above all-time highs, and then he's predicting like an 80% crash from the all-time high once all this starts unraveling, because at certain points certain things start selling off, but these options that are all over the market, when they start getting called, they start getting pulled, it's just going to be this huge drawdown on the market. And at that point, you're going to wish that you were not just holding stocks and bonds.
Oh yeah, no, absolutely. So, hold on, just gonna share his screen.
Yeah, I want to just show this.
But real quick, I just want to say something real quick. Those of you that are new to the show, because it looks like Blockchain Basement just ended, and that the basement crew jumped in here. So to a couple of hundred people that are watching live right now, I just want to introduce Taylor and Jeff again real quick. We're not just three degens that are into crypto. I'm the degen in DeFi, but Taylor is an estate planning attorney in Texas and has a title company, real estate title company. Jeff is his business partner and a financial advisor. So they speak from a position of authority on those topics. But if you could, please drop your questions in the comments, and I will make sure that we get those answered for you. So, sorry, Jeff, go ahead.
Well, two things. So, one on this, let me get to my screen that I'm trying to share here. Let's see here. And is it moving when I do it? Right. So
Yes.
so just because, and I realize I do understand that gold's different than Bitcoin, but it is the closest proxy, I would say, as far as like really big picture concept of store of value, right?
Yeah, right now that's where they peg it as they say it's more like a commodity than it is a currency.
Okay. So with that though, well, but I mean, gold's more of a store of value, for example, than like silver or copper that goes up and down with recession and business cycle.
Yeah.
But dang it, I'm gonna have to take. I got a situation here, but the thing I want to point out is this is gold over the last from 2000 to 2025 and 2000 2010. Now you see in 2000 2010 the market was the purple, gold exploded, right? So gold basically quadrupled in 10 years. Market was flat. Okay. Over the last 25 years, though, gold's still done better, but market caught up after having a really rough first decade. So it's like, oh well, obviously, everybody should buy gold, right? Store of value, only print more money. Market, it's just going to get ever increasing and go up, kind of like the Bitcoin argument.
Mm-hmm.
But check this out: in 1980 through 2000, gold got cut in half, and this is what the market did. So people just need, and my point is, gold is gold, right? It's not like people were like swimming in it like Scrooge McDuck back then.
Yeah, but something we are definitely in a position right now as a nation that our markets are not going to be a stellar performer going forward, especially with people ditching the dollar.
I completely agree. I think the markets are ripe for a massive correction. I mean, I don't know how they can't be. I'm simply stating that gold is worth what someone else will pay for it, right? Same thing.
That's true of everything, really.
Well, it is, but it is not, right? Because if you own a business that nobody wants to buy, like for example, let's say Taylor's estate planning business. For argument's sake, nobody wants to buy it. But as long as it works as a business and it makes a profit, it generates real money. Kind of like DeFi, right? Whereas if you're just buying a coin or, you know what I mean? Like it's only worth what you can trade it for. Same thing with gold, same thing with silver, same thing with a barrel of oil. It's whatever it's worth at that day, that moment. Whereas a business, which is theoretically what stock represents, if it's generating profit, if it's actually a positive cash flowing business, it doesn't really, even if nobody wants to buy it from you, it still has value to you because you can just take the profit. So there is a difference. I don't think people need to get too over in one category or the other, but I would absolutely agree, particularly considering if we pass a bill that's going to add somewhere between $4 to $5 trillion in debt, Bitcoin certainly makes sense to me.
Mm-hmm.
Long term, regardless of what happens short term. I got to pause off screen for just about 2 minutes, gentlemen. I'll be right back.
No worries.
But that's. Let me bring up some things. So there was a question asked about Fornox inventory has not been verified. The last comprehensive audit was in 1953. Just so we can throw that out there.
Well, and I know Drew over on Blockchain Basement, he's brought this up that, and actually I would love to hear your thoughts on this, Taylor, is I think the last time that they did a valuation on the gold, they valued, it was like only $34 an ounce or something like that, which obviously has changed quite a bit. So, if they did an audit and all the gold that was there at that time is there, then all of that gold could be potentially revalued at what, around $3,000 an ounce, whatever gold is right now.
Yeah. So it was the last time that there's been any kind of sampling from the Treasury office was in 2008.
Okay.
So it's very interesting. Like, why? If that's one of our largest assets that we have, what in the world's going on there? But the reality is like you have to understand where we are in. Can I talk about the fourth turning for a sec?
Have at it, man. Anything goes.
Okay, so there's a book I recommend everybody read. It's called The Fourth Turning, and it describes the four generations that cycle through whenever you are talking about a society. And so whenever we go from the Roman Empire had a thing called the Seculum. And the Seculum was an 80 to 100 year period where society repeated itself or came about to almost the exact same situation. For example, in America, if you go 80 to 100, about 80 years, you get to the Civil War. 80 years from the Civil War to World War II is about 80 years. And now we are about 80 years from World War II. So in that process of going through that cycle, one of the big things that happens is the economy usually collapses at the end of the 80-year cycle. And when that happens, there's usually a reset. Now, there's another book you can read, Ray Dalio's book that he puts out, and he calls it the big cycle. And he says that society goes through three seculums, and then a society collapses. If that holds true, that means America is going to end as the world dominant economic power. And he projected that in his book to happen sometime this decade. So it seems to be that we are following the pattern almost precisely. You just watch the news, how crazy things are. They're constantly massive changes are constantly happening. That's usually a sign that things are breaking down. That's why I'm scared just to hold tons of money in U.S. assets, because
dirty fiat.
Yeah, I mean, if this really does happen, you're going to see a significant decline. And no nation has been more dependent upon its financial markets than the United States is right now. We don't produce anything. All we do is pretty much service things to each other and finance everything. Yeah, it's the fourth turning. That's the name of the book. It was written by Neil.
Do you want to detail? You want to detail what kind of what the churnings are?
Yeah. So you have it refers to is, think of it, the seasons. You have spring, where things think of after World War II, everything was wonderful. There's about a 20 to 30 year period of time where things are going good, everything's wonderful. That's what happened right after World War II. Then you have kind of a summer. Things are still good. It's not as good as it was before, but it's kind of heating up. And so if you go about 20 to 30 year time period, we would think of that generation as the baby boomer generation coming up. Then you have another 20 to 30 year period of time where things start falling apart. You started seeing that usually it ends with some kind of financial or situational. We would say that was around 9/11, and then you have winter. And then winter ends. Winter ends, it ends always in a great crisis.
Yay!
Exactly.
The fourth turning.
Yeah, and it's usually a war, but their argument is it's a natural process of humanity, because what has to happen is, and you don't think of it as weather, think of it as generations. The old generation has to be removed from positions of power. And that's what the Great Crisis does. And that's what we're seeing right now, is the baby boomer generation refusing to let go. And so what ends up happening is some massive crisis, because nature requires, if baby boomers don't want to give up the control, the young people aren't just going to sit around and be your slaves. They're just going to go, forget you. We'll leave. So nations will end because of it, because people will run away. But that is the process that we continue the cycle. I read the book like 10 years ago, and it's been spot on. Like it really has hit like what's really going on in our society. And you see it today. Like his argument was in the 2020s, you would see more and more programs and benefits given to older generations because they have more voting power. Um, Very interesting. In this big, beautiful bill, there was a provision, and I don't know if it got passed through. They're going to give $6,000 per senior. That's like $1.4 trillion to each senior. That's enough money to pay off all student loan debt in America. Like, we've been sitting here listening to everybody complain and whine about how student loans shouldn't be paid off, but yet our government is turning around right now and going to give more money to seniors for nothing. They didn't earn it. They didn't do anything to get it. It's a 100% welfare check given to them because they vote. They show up at the poll.
Oh yeah, no, I mean, I think all around, I don't care what it is, the government needs to be, and I personally think it's too late to, roll it back, with the interest being accrued. But, across the board, the government needs to spend less. I don't care what it's on. I don't care if it's social programs. I don't care if it's subsidizing corporations. I don't care if it's handouts like this, if it's, student loans. They just need to stop. That's and they won't. I don't think they're capable of it.
Yeah, no, yeah. Well, right now with this big beautiful bill, this is like pretty much saying we give up. Like you can't add this much more debt on top of everything, and it be anything reasonable. And it's not like the money's going to good things that could produce something like infrastructure or we're going to redo our waterways or build hydroelectronic plants. Yeah. Like it's not going to any of that. It's going to military industrial complex. It is going to seniors. It is going to like all the things if you're hoping for a future of your society, you should not be spending money on.
Yeah.
I hate to say this, but it's like you don't spend money on your old people when you're hoping for a future. You spend it on your young people. Right? Yeah. That's where the money should be going. So, but that's the reality of the situation. That's why I'm on the boat that I'm in the category of holding 40%. Actually, I'm over 50%
in crypto.
I'm not saying you should be impressive with me.
I'm 100%.
So we got Mike's at 100. I'm at 50. That's at 0.
We're the full spectrum.
Yeah, but it's good to have everybody's opinion. We none of us know the future for sure, but
no,
I think we all have our different perspectives. And a year from now, when Mike and I are rich and Jeff is we'll be like, hey,
Jeff is under a viaduct selling feet pics.
Well, I will say, this is, not to be Cassandra complexed or doom and gloom, but I mean, I think we're likely going to look back and we're already in a recession, but if not, we're about to go into one, in my opinion. If Trump doesn't pull back on the tariffs, I think it's absolutely inevitable. Because I saw some data. I mean, I meant to, my goal for our next one is to have a bunch of stuff bookmarked, so I have to just look for it the entire time. But I saw that like 70% of the tariffs that are in force, like that aren't being paused because they're all different pauses and levels and just kiddings and wait seconds and all that stuff, like 60 to 70% is being passed through. And it's probably only going to go up, right? Because one of the things that has stopped these tariffs from being passed through is simply the fact that no one wants to be first mover in the marketplace of raising their prices on their customers, and they keep hoping it's just a negotiating tactic and not for real, right?
Yeah.
But some stuff that I've seen, like for example, I'm just looking at this right now. I won't bother sharing my screen. I'll just tell you, 21.2% of all consumers in the United States are using BNPL, buy now, pay later loans, which
Ugh.
are now going to be picked up by credit companies, which is only going to lower their credit scores. 63% are juggling, the 63% of those consumers are juggling stacked multiple buy now, pay later loans.
Is
Right?
that what they call private credit?
No, buy now, pay later is more like Klarna and all, like when you're checking out, and then like even in your bank now, Chase will offer you to say, oh, well, you want to split this over 4 payments instead of having to hit your account now, or do you want to, or Chime, or any of these things where you're buying services. Like you go to Peloton, you can buy it. Basically, it's when you're financing lower end purchases. Now, Peloton's not necessarily a lower end purchase, but what we might think of is, oh, well, I bought my TV on Best Buy for 12 months of no interest financing. Same exact idea, except for you can do it now with your groceries. You can do it
Oh,
with Uber rides if you want to. Like it's
oh
getting
no.
ridiculous. And so, we have something else. I do want to show you guys this, and I understand this is a philosophy issue, and I'm curious to see what people think about it. But if I go to my bookmarks really quickly, let's see here. This is an interesting. This is worth sharing. Just one second. I got to go to where I can click on the thing to share. Where's my thing that lets me share? Here it is. All right, share screen.
No, you were already sharing.
Oh, well, there we go. This thing right here.
You unshared. You got to reshare now.
All right, unshared. Well, now I'm resharing. Gosh darn it. I think it's this. There we go.
Jeff,
So this is 2023, which it's only worse since this graph, by the way.
Jeff's new to technology. That's why he refuses to buy Bitcoin.
But let me tell you though, I think horseshoes are going to be huge. So,
yes, it's a growth industry.
This is a breakdown where we spend the money in the hot pink. Why they picked hot pink, I don't know. And this is where we get the where we get the resources from. The main thing I want to point out here that I think is kind of interesting is you see where it says corporate income tax? You see what a small slice that is relative to individual income tax?
Yeah.
Now, I understand you say, well, corporate income tax is no different than tariffs. You raise corporate income tax, they're just going to turn around and pass it through to us. And that's probably true, right? But that seems, there's got to be a way to reform that to some degree.
Well,
I mean, I remember in 2011, like Apple got like $1 billion refund for R&D from the government. Like, okay, fine, don't charge them taxes or whatever
and your apples still suck, man. They got $1 billion back, did nothing for it.
My point is, it's one thing to have low corporate taxes to increase, competitiveness and profitability, and let them pay more in wages and all that stuff. It's another thing to rebate to Fortune 10 companies, not Fortune 500, Fortune 10, billions of dollars of our money.
Mm-hmm.
Because if you're not a shareholder or you're not a customer, that's just money that went somewhere else, right? Like, so there's things that I just don't quite understand about this, but you look at this and it's like, well, what are you cutting? Where are you going to, this is where, like, you see where it says other spending? And maybe that's the only place that Elon was allowed to play, really. Right? Because entitlements, Social Security, Medicare, those are all mandated expenses. Now, granted, in this bill, presuming it goes liabilities, through, about 11 million people will not have insurance because of Medicaid cuts, which from a moral perspective is pretty wrong, but maybe that's what needs to be done. I don't know. I'm not even going to make a comment on that except for to say that there are some things being cut, good, bad, or indifferent. But I will tell you, it sits with me, and I spend a good chunk of my planning, probably 30-40% of my planning is just tax planning, just minimizing taxes. But I don't know if we needed to extend tax cuts to the point that we can't take care of, the single
elderly
kid on down.
No, there's definitely better places to be cutting, but
yeah, I might cut some defense a little bit. I might cut some.
Yeah.
I might, like, for example, on the flip side, I'm all. I just went on vacation with my family, right? We went
Stop sending money
We
overseas.
saw a bunch of museums and stuff. It was cool. But I paid
Museums?
for the museums. I don't need to spend government money on museums,
Museums.
right? Or how do they take that word, right? So, like,
Museums.
what's going to happen if we have a major
Museums.
recession? This is going to have to be completely restructured.
Oh, I see how we solve the problem. Just get rid of all the old people. Look,
There you go. There you go.
Get rid of Social Security entirely. Yeah.
look, that block is the
Problem
same size
solved.
as the deficit one.
Yeah. Same problem solved.
Oh, maybe that's what COVID was about. That's why Fauci was trying to get it really.
Honestly, there is people that believe that that is a part of it because, people that were, had compromised immune systems and older and, things like that. There's some people, that think that that was kind of what they were going for. Oh yeah, no, I mean, I can see, I can see with, if you look at the big picture where, there's a lot of unfunded liabilities and, things like that, that, are part of an aging society, yeah, if you can get rid of those people in a roundabout way, it helps quite a bit.
Mm-hmm.
Wow, that makes sense now. It's all coming together.
Jay asked a question. Says, "Aren't we a lost cause by now? I mean, what did you have a $37 trillion debt, soon to be $40 trillion?" And I don't have a good answer for you. I will tell you if you look at, and I'll try to find it. I'll have it for next week. But I saw a chart the other day, and it showed it was the ratio of debt to GDP. Right. So how much debt do we have as a percentage of GDP? And the only good news is we actually have been here before. We're a little bit higher on a ratio level, but we've been here before. And it was 1945.
Ooh.
The end of World War II, our debt related to the size of our economy
Coincidence?
was the same relative gap, right? It wasn't trillions of dollars because obviously money was a lot different back then. But the ratio of how valuable is our economy on a yearly basis measured by GDP versus how much debt we were in, the ratio was the same as it was in about 2021 on our debt. Okay. The problem is I'm not sure if World War III is an option. Sounds awful, but I'm really not sure. And we do have an expert military person here, if World War III is an option that's non-nuclear, right? What people don't appreciate about World War II is we were the only major ally power that, while we had tremendous costs financially and terrible costs from a manpower standpoint, right? I think 400,000 Americans died, 7 or 8 million served. It's why they're called the greatest generation, right? There's a lot of things there that we should honor and never forget. But the reality is we were the only power that we had no damage taken to our country on the home front, right? Europe was decimated. We had to have a Marshall Plan. Japan decimated. Russia basically decimated with the amount of people that they lost and the fronts that they fought. Of course, they took over half of Europe to make up for it. But what I'm getting
reparations.
We're the lone superpower left over is because we were the only ones that didn't
with our infrastructure intact.
Infrastructure damage. We were fighting on someone else's shores. So, we've been here before and we got out of it, but we got out of it through the worst war ever known to mankind in a completely unique manner, which we can't replicate. And I don't think we want to replicate even if we could.
Jeff, I can lay out what's going to happen. Over the next 5 years, we're going to have significant problems. We're going to see a significant financial hit to the United States of America. I don't know if America will come out as the leading empire. I think most likely it's going to be China because they have all the infrastructure to build the robots, because robotics is the future. That is going to be if we do not get AI and robotics to work, that there's going to be a significant disaster on this planet. I mean, there will be billions of people that will die because the system will break down. We have, 7 to 8 billion people on this planet, and it's run by an incredible infrastructure that's so complex. If that starts to break down, especially a world war or something, it's going to be a disaster. But the future, the three technologies of the future are blockchain technology. We have to get money out of the hands of people, because people, human beings have shown we are untrustworthy in positions of power.
Yeah.
Blockchain technology is our opportunity to get away from systems that governments and wealthy people control the financial system.
Well, it gives transparency. So, there's going to be people that are running things, but it will give us, transparency on how our tax dollars are being spent if they put it on chain. We'll be able to see, like, voting. We'll be able to see, it's like, can we trust, the voting system? If it goes on chain, it can be audited by anybody, and you can look and say, yep, every person that was eligible to vote voted, and it wasn't tampered with. It's just, I mean, that we've lost trust in those that lead our societies. You are 100% correct.
And the problem is going forward, it will be the cryptos that will do the best are the decentralized ones, the ones that people do have the littlest amount of influence or power over. The second thing is AI is going to be a huge disruptor, but it is the greatest equalizing force in the world. If you go over any kind of study, if you want to look at any study that shows income inequality is governed almost singular by IQ. You look at IQ, IQ explains all income inequality. AI is the first opportunity that a dumb person like myself can now compete with a highly intelligent person, because I basically have a genius in my pocket.
Yeah.
Oh, that's what you call it.
And it's not
but the genius is a midget.
Hey, baby, my genius.
Quite short, but he's stubby. All right.
Yeah.
So, but
I'm a grower, not a shower.
That's going to be the great equalizing force. Those people out in the world that will apply themselves, that will work hard, will be able to rise to the top, where before you were hampered. IQ access to certain things. Crypto is going to allow access to financing like never before. And the last, which is really unfortunately in America, our government is not figuring out, it is robotics. You have to build robots at mass scale. China has all the infrastructure. We do not. Our hope is that we can hold on to the AI dominance, so we control the intellect, but they control the production of the robotics. That's going to be, once robotics rolls out, you're going to see mass deflation, huge productivity increases, and we'll work our way out of this mess. But there is a pathway out of this that doesn't involve us all dying. The universe seems to always magically come up with a path right when it needs it to get us out of a mess. So,
well, we're about done with the hour. I definitely want to get closing thoughts from each of you. Before we do, I just want to give a shout out. Here our family of channels. So, obviously you're watching DeFi, crypto, and airdrops. But if you could, and you're not already, check out Discover Crypto, Blockchain Report, Blockchain Basement. Drew and Isaac over there. You got TJ, DZ, and Josh over at Discover Crypto, and Kelly over at BitLab Academy if you're into trading or wanting to learn technical analysis. And then, of course, us for DeFi and airdrops, and our weekly show that we're doing right now, Money Talks, just basically talking about overall finance, macro, conspiracy theories, whatever. But Taylor, please go ahead and continue on and give us your closing thoughts.
All right. So my closing thought is, over the next 10 years, there will be a major crisis. This major crisis will cause significant financial damage to a lot of people. Do not lose hope, because on the back end of all of it, there will be great prosperity. We are at a time where things are going to completely change. It will turn into what you would will appear to be like a sci-fi world over the
Star
next.
Trek.
Yeah, like there's going to be technologies that you could never comprehend come out. But just to put it in perspective, over the next 4 years, they're supposed to 100x the capacity of ChatGPT. That is the projection. 100x its capacity. Think of what it can do right now. What is 100x capacity? What could it do for you? Do not lose hope. Do not get into this mindset of, oh, everything's doom and gloom. When everything falls apart and it looks like all hope is lost, invest as much money as you can, because that's when everything will turn around. And the new generation of those people are going to make a lot of money.
Mm-hmm. Jeff?
I'll concur with all of that.
Very, very pointed points that you made there. Very astute.
Well, I'm just, I'm looking for. I need to really dig in and get like what's passing, what's coming down the pike with a big beautiful bill. But I certainly like the tax part, right? As a tax planner, I think all of us are probably going to enjoy the tax part. There's some other things in there, but man, I'm not so sure when we are going into a massive energy deficit with AI and everything else, and China's kicking our ass on energy, by the way.
Yes, they are.
We just decimate. We just completely set back clean energy. And again, this has nothing to do, in my opinion, one way or the other, with global warming. Isn't whatever. I'm just talking about, I think we should be pursuing all forms of energy.
Yeah.
Particularly because eventually, I mean, the reality is the sun, there's enough energy that hits the earth that 8 minutes of sunlight, if you could capture all the sunlight, if you could turn all the sunlight through photovoltaic cells into energy, you could power the earth for a year in 8 minutes. So like it's there. We just got to get that technology better.
AI.
And apparently
we have 0 point energy.
Got rid of that.
You've seen our UFOs flying around.
Right. Okay, fair. But the other thing is we just gave, I'm looking through this, we just gave a tax, like we're like giving rebates to coal companies. Like, why do we need to do that? I don't know. I'm frustrated where the money's going. So I'm going to look into this. I'll have some comments next time.
Nice.
But I do think Taylor's, I mean, I don't want to act like I'm like this guy is full of doom and gloom. It's scary. It's kind of unprecedented. We're in a weird time. I do think Microsoft's announcing layoffs tomorrow. I do think people need to be, I would say, do your crypto thing, but raise some cash depending upon how exposed your job is or what you do.
You shut your whore mouth.
We're getting into an area that I think we're going to see for some rough waters for the next several years.
How is your Chinese? Ni hao?
Japan?
All right, it's pretty bad.
I don't know.
All right,
that's time. Whatever. That's all I got.
So my closing thoughts. Take into account, always plan for the worst, and and prepare for it. And no matter what, you're pleasantly surprised. So, my thoughts are, focus on being self-sufficient when it comes to food. There's nothing wrong. There's natural disasters that happen. Have a week's worth of food and water, stored in your house. Have a firearm, know how to use it, have some ammunition to protect yourself. Investment wise, get into some traditional finance, get in, learn DeFi, learn about crypto. It's not a trend. It's not a fad. It's not going away. Learn about it. Even if you don't invest in it, learn about it, because it's going to be a part of the future. AI, robotics, all these things Taylor talked about, they are all going to be part of the future. If you're ignorant of these things, if you're not an early adopter, you're going to be a part of that world either way. So, and if you, are a little more risk on, then yes, invest in these things. Early adopters are the ones that profit the most. Those of us in DeFi are making huge profits right now. Somebody in the chat earlier on was talking about potentially the earnings going down in DeFi as more people adopt. Could that happen? Yes. Me personally, I think the more people that get into it, there's more people swapping and generating fees and things like that. Yes, there's still people that are taking those fees, more people taking those fees, but that ecosystem is going to find its equilibrium. So get in now because the floodgates are about to open. And I'll end with this. Coinbase just announced this past week that they are onboarding DeFi and RWAs, real world asset, tokenized real world assets like stocks, bonds, things like that, natively on their platform directly. Barriers to entry like hot wallets and cold wallets are going to melt away. The masses are going to be able to, grandma sitting on her couch with a smartphone is going to be able to invest in these things. The liquidity is coming. You need to get in now, if you have that expendable income. Otherwise, you're going to get left behind. So, thank you, gentlemen, Taylor, Jeff, and until next time, Veteran Crypto out.